push the products into Pakistan. We came up with a very innovative product from wallet to wallet, and then we had the grant from IFAD to actually do this to the rural Pakistanis, which was very well accepted is because nobody else was offering this service. Moment you send from here, the money can be immediately cashed out from the wallet from the nearest village where the person is staying. And this also actually helped us to build the product. So my point here is that it's very important for people to understand what problem are we trying to solve of the customers. If we are not actually addressing that, and if you're not paying attention into the data and converting that into insights, and not designing your product to actually solve the problem, you're bound to have this problem in terms of ending up into a failure.
Good, good, good. Anyone of you want to add something, or should we go to another question? Whatever. You want to add something?
We are here to share our experience in any case. If we are not doing mistakes, then we are not learning, right? So there have been a lot of mistakes, but then we have learned and we have moved on. If I have to share some experiences, then I can talk about one of the corridors, which is UK to Pakistan. Incidentally, in our case, we have many countries where we have something called anywhere payout, which means that on the termination side, the beneficiary can go to any of the locations. There is no compulsion that he should go to A location or B location. He can go to any location in that country and pick up cash. So we launched anywhere payout way back in countries like India, Pakistan, Bangladesh, Philippines, many African countries. But then, we started sourcing a lot of business from UK to Pakistan. But somewhere down the line, we saw the numbers stagnating and the numbers started dipping. I think we had not kept an eye on what was going on in the market. What was happening in the market was that there were players in the market who had found a way out to grab market share. What they did was, for example now, in anywhere payout, what happens is you come up with something called weighted average rate. Let's say you have 10 payout partners who offer you 10 different settlement rates. And when you offer the rate to the customer, you have something called weighted average rate, which means that the weighted average rate, it is worse off compared to the best rate. But it is better off compared to the worst rate, right? But in the process, you may lose out. If somebody is offering direct partner payouts in that particular country, you may lose out because your weighted average rate is never better than the best rate. So we saw this lacuna and we tried correcting it. We had almost similar set of partners. We started offering direct payouts, right? By offering a rate that was shared better than what the competition was offering. And we also pooled a lot of other partners under the anywhere payout system. So we had both options. We had direct partner payout rate. We also had the anywhere payout rate. This was a lesson learned from what was going on in the market. Good example. Thank you. Anybody has any example of a failed service or corridor or something? No? Okay, let me go to so because we're talking about emerging money transfer business models. Of course, we're going to talk about technology, of course. Before we jump into technology, because it's the obvious answer that emerging business models, and we can see it from Valyou and from Axiata, they are leveraging technology. But we'll talk about technology. Non-technology business models that have proven effective. I'm going to start with Sudhesh, because you're the person with more time in the industry. And then we go to the younger, more technologically inclined company. So let's start with you. Hugo, whether it is fintech or non-fintech, I think technology is the backbone, right, of the money transfer business today. When we offer a platform, it is actually backed by technology, right? We constantly keep updating our platform so that there is technology in it. We keep on adding features from time to time. There's technology behind it. Last year, we launched 3 new offerings in the market. One was Xpress Money Biz, which is an application software which the agents can make use of. It's a readily available software, and an agent can just switch on within no time. So it's called Xpress Money Biz. We also came up with something called Xpress Money Flex, Today, for example, we have some great names that we are partnered with. ADCB Bank, one of the well-known banks in UAE, another bank by name Black Bank, and a bank called Commercial Bank of Qatar in Qatar, and a very large online player, World Remit, I'm sure. Catherine Wines is sitting somewhere here. We partnered with them about a year and a half back. So all this was under the umbrella of Flex. What Flex actually does is that Flex is nothing but an open API, and the API has all the channels built in, the cash remittances, the account credits, the mobile wallet credits, door deliveries, everything is on one API. So Flex has become, very, very useful, something, which is completely backed by technology. We also launched what is known as Express Money One last year. Express Money One is something which caters to the non-financial institution category. Whatever I spoke about just now, the banks and the online players fit under they come under the financial institution category. Express Money One caters to non-financial segment, which means that, for example, let's say there is a very large retail giant in the US who wants to get into remittances, for example. Express Money One offers the entire infrastructure, the license, the compliance, the global payout network, the contact center assistance, everything comes on one platform called Express Money One, and this is something which is completely backed by technology.
So do you think there are non-technology based solutions that can be emerging as business models for this industry? Because what you just told me is basically you believe that technology is really the backbone of any innovation as we go forward.
Absolutely. See, whether it is brick and mortar or digital. For example, now we are in the digital space also. We have the online platform which is available in certain markets. So this is something which is always backed by technology.
Okay. You can, yes, Prasanna.
I can just say that to stay competitive, it has to be technological innovation. Because if somebody else is going to be more innovative than you, and you will lose out in the competitiveness. So I would just like to say that to stay competitive, you have to be innovating every time, and technology is the best thing to use. Once you used the innovation and you passed on that benefit to the customer, there is a reduction in the cost. So once the cost is reduced, he's always going to be with you. So to stay competitive, it's very important that you need to keep innovating.
So my point of view, the technology and the platforms already exist. It's some of the offline problems that needs to be solved before the pervasiveness of those platforms can be a little bit higher than what it is today, right? So I think we've all talked about it, right? The idea that for me as a foreign worker, I don't need to travel 40 minutes by bus in to go see an agent, to go give him the cash, to then get sent to someone else on the other side who then has to travel by bus for 40 minutes to another agent to then collect the cash. Like you literally want to kind of just be able to tap it on the phone, not even a smartphone, a standard feature phone using USSD. Those platforms are already there, but you still have some, kind of real-world offline problems to solve. How does the money actually get into the so-called wallet in the first place, right? We have to solve the wage disbursement issue, right, such that big employers or foreign workers will actually not send money by cash, on a motorcycle to distribute in all these dorms, but actually to kind of shoot it into their wallets, into those e-wallets, right, et cetera, et cetera. So there are all of these offline problems that needs to be solved before the technology can be fully deployed.
Well, let's talk a little bit more about mobile, because we know that we've been talking about, every one of you have mentioned mobile as a solution. There are many ways mobile money is being used, and there are many countries where it's not being used, even if the solutions are great. So I want to ask you, what is your point of view with regards to those solutions? I mean, because it's not only the technology. You just said it, Khairil. The solution can be great, but it just is not adopted. So let's talk about adoption here. I want to hear your point of view. So we'll start with Prasanna.
I think you brought up a very right point here. Adoption is not going to be easy because it's a behavior change. Because three reasons. One is they are not digitally literate, first of all. Second, first of all, they are not literate. Second, they are not digitally literate. And third, they don't touch and feel. So when they don't touch and feel, they won't put their hard-earned money into the mobile wallet, what they cannot see. So that takes a little bit of time. So what we've actually done is, we have these ambassadors in every of the dorms or the hostels or the estates, and we make them actually kind of, as the ambassadors, to start sending the money, and then they experience it, and then the word of mouth spreads. Like, nothing better work, because these guys, this particular community is media blind. You can't go on any ATL to just talk about your wallet. They are not someone who will even believe that such a thing can happen. So we have these ambassadors who talk in their language, and they experience it, and they are able to get the money in the next minute at the receiving end. And then they see that we also actually kind of incentivize to keep some kind of balances in their wallets, incentivize to send through the wallet, and then the word of mouth keeps spreading. If you're going to talk about a brand or an awareness to be created for a brick and mortar is 3 months, probably mobile wallet probably it would take from 3 to 6 months. But then you have a chance to lose that customer in the brick and mortar. But in the case of mobile wallet, where he sees a benefit, there is a lot of incentive for him to actually use this. He is your customer forever. So answer to your question is, adoption is not easy. It takes time, but definitely they will always use it as long as there is some incentive for them in terms of convenience, and in terms of their money being safe, and in terms of the money being cashed out in the next moment at the receiving end.
Okay. Okay, well.
I agree with you, adoption is going to be an issue. But I think it's going to be an even bigger issue if the only use case of whatever solution you're providing is remittance. Right? And go back to that same premise that I started with, right? Remittance is not a high velocity use case, right? You don't send money to your mom every single day, right? But you do buy food every day. You do consume content every day. You want to catch up with the news every day, right? So if you can create a little bit more of a comprehensive solution that allows people to kind of have engage with the solution in more than just sending money, then the trust for the solution becomes a little bit more, the trust starts building, right? And so if you look at a number of what our subsidiary companies are doing, what our solutions are doing, it's actually that, right? Is making sure that we procure the content, be it Bangladeshi music, or up-to-date news from Indonesia, or whatever that might be, such that we can then deliver it as a solution. And then there will be other use cases that requires payment. There will be other use cases that requires financial services that then that builds the trust, such that when they then go into a low velocity use case like remittance, that's no longer an issue, because I trust you enough to kind of buy my nasi lemak with your wallet. But then when it comes to sending money, ooh, that's a big sum. I only do it once. If it's a single use case, then first time around I'm going to send 900 ringgit as you said, or 600 ringgit as you said. A little bit nervous, right? And the next month comes around, I haven't kind of overcome that trust hump yet. And then the next month comes around, I still haven't overcome that trust hump. So you're in this kind of no-win situation, right? So, but I think if you build a solution that has other engagement opportunities with that solution, then you're already slowly starting to build that trust, right? And that's what we're trying to do. Yeah.
Good point. I completely agree with Khairil. Instead of making it as a remittance app, maybe make it as a lifestyle app where he can do a telco top-up for himself here, telco top-up for his loved ones back home. I think the usability and the use cases are more. I think that then there is a more chances of he actually adopting it much faster.
I completely agree. I think it's all about building a comprehensive solution, offering more value to the customer. Just look at the M-Pesa example in Kenya. I think M-Pesa has become a household name because of whatever value Safaricom have been able to offer to the customers. Right? In 2007, M-Pesa was born. In the last 11 years, they have built a fantastic ecosystem in Kenya. When money flows internationally onto the mobile wallet in Kenya today, the customers can do everything that they just mentioned. For example, they can do bill payments, they can do insurance payment, they can pay for school fees, and they can do P2P, domestic money transfers, and so on and so forth. So there is a value that is already seen by the customer, right? So buoyed by the success of M-Pesa in Kenya, I think the mobile wallet revolution then got spread in markets like Tanzania, Uganda, Ghana, now Nigeria. I think across Africa, the mobile wallets are really taken off. And one other reason for that that to happen is the poor banking network in Africa, right? Customers did not have bank accounts. The financial inclusion was at its lowest. So this is how, in 2007, M-Pesa came into existence, and there has been no looking back.
So Sudhesh, you think the traditional business model, the agent cash-based models, will survive in this environment? What do you think? Just looking ahead, do you think?
Definitely, I think cash is king still. The brick and mortar is going to continue for the next many years. I've been sharing these statistics, very often. Globally today, if you look at the cash to non-cash is 94-6. Right? Look at some of the examples across the globe. Look at the Walmart model in the US. Now they are talking about the digital app, etc. going forward. But then traditionally for the last few decades, Walmart has done brick and mortar remittances. Yeah, as much as you see in the Middle East, people lining up at an exchange house for remittances, you see the same thing in Walmart in the US and across many other retail locations in the US. Out of the $148 billion which World Bank says went out of US last year, a predominant portion is still cash remittances. People pay in cash, people receive in cash. Look at Mexico, for example, which is a $25 billion market from the US, right? 95% plus is cash in and 95% plus is cash out.
And I tell you something that is very interesting. Discussing this subject with the cash management companies, technology is making cash even cheaper. So technology is also advancing the distribution and logistics of cash. So, and as banking institutions don't want to touch cash, the companies that are managing cash in many countries, even distributing, resending, storing, all that, are doing it even much cheaper than banks. So I always tell money transfer companies, it's going to be very hard with digital payments to compete in cost, because the cost of cash is even going down with technology. So and when you have a digital payment, I'm just going to throw it for your points of view, and maybe some of you wanna join in, is that in digital payment, every time, every loop, every jump, there's somebody making money. There's somebody charging something. In cash, it's not always the case. There are companies that have cash that they can get rid of it and will pay for it because it's a cost for them. So just as a food for thought. I see the three of you want to jump in. So
no, actually, I just want to say one more thing. Not that digital remittances do not have a future. They do. They certainly do. But what we had anticipated or envisaged a few years back, saying that digital remittances are just going to take off, they'll go through the roof within no time, hasn't happened. The pace has been abysmally low.
Yeah. So go ahead.
If you see the cost for the mobile wallet today is the cash-in cost. And if this, as Khairil said, that if these offline things can be actually plugged in, and then there is no cost. And all this cost will be passed on as a benefit to the customers. And when this goes as a benefit to the customer, and then definitely you can see that the brick and mortar will feel this pressure. Not to say that they will have this pressure immediately, but then once the cash-in is going to go digitally, maybe the salary is getting into the wallet, or the money being transferred from the bank account into the wallet, there is no cash-in cost. And that's the cost that mobile wallets are actually having the pressure now on. Once this is eliminated, then definitely the customer is the king there, because he gets all the benefit of the cost.
So and maybe I would be wrong here, but the numbers that you just talked about, kind of 90, 10, 10, maybe in 5 years that number will be reversed, right? Because as what Prasanna said, there are some offline issues that we need to address, but there is a lot of economic value and economic incentive to crack that. And And once you crack that, that value would then be transferred back to them, and people will focus on that, right? We are focusing on that, right? I'll cite two other examples. So the CEO of Boost in Malaysia, by the way, he's the former CFO of Safaricom. So he, and you'll hear the stories that he almost shut down M-Pesa because, like any dutiful CFO, he's going like, why are we burning so much cash in this little initiative here, right? But he saw what it could be, and he's now kind of come to Malaysia and helping us implement a number of these little things, right? But when you look at some of the statistics that happened with Kenya, with Safaricom, that number flipped very, very quickly. It came very suddenly, right? 3 years ago, 4 years ago in China, cash was still king. My son studies in Shanghai, by the way, so once in a while he'll come back for Christmas, for holidays. And the last time he came back, I gave him some Malaysian ringgit, cash. And he looked at it and he says, what's this? All right. And in all his time that he was in Shanghai, he didn't touch cash. Not at all. Not a single time. And it's like, what about food? No, nothing. Travel, food, books, everything, all done without cash, right? The last bit of warning, and maybe this is from telcos, right? Once upon a time, we had this major business called SMS, right? It went just like that, disappeared overnight, right? And that will be the same, right? The agent business will go.
Yeah.
Well, actually, let me say,
Yeah. Okay. Can I just take one more minute? Now, just referring back to what you just said, you look at the top 10 send countries in the world today, starting with US. I just mentioned the numbers, $148 billion, and then next comes Saudi Arabia, then comes United Arab Emirates, then comes UK, the list goes on. You look at each and every market and you just see as to what's happening on the paying side even today. You look at Saudi Arabia, it is, I mean, hardly any digital contribution. You see people going to the likes of Al Raji or Bank Al Bilal and so on and so forth. Okay, all done through a typical brick and mortar model. Same is the case with UAE. All the exchange houses in the UAE are playing a major role even today. The US example I already gave. Look at UK, for example. You go to the streets of UK and see where the remittances actually happen. Right? If you look at the top 10 send countries which contribute to, let's say, 65% of your overall remittance numbers, you would see that even today, the brick and mortar, the cash paying is thriving. Yeah.
Now, I want to say something. This intermediating agents, it's a complicated issue. You said the cash in, cash out is costly. The agent is making money there. Agents, and if you've been to sending markets, migrants, they love to congregate in many places. In Asia, you've got a Filipino center in Hong Kong. In Latin America, you have the cities where they congregate because going to a place carries a human side of that. You go to these places and you talk your language and you get the newspaper and you are there. You maybe happen every Saturday or every Sunday, depending on the city. So there's a human aspect to going to an agent. Okay, you can disintermediate the agent. The agent is going to keep on playing some role in the community. It's like a little embassy of your country. So there's an aspect there in the sending market of the agents. In the sending market, very few banks have been successful. Very few. In the paying side, it's easier. You just pay it. It's in an account. Some of those market mobile money, but in the sending side, it's becoming a little bit more complex. So my question here is, make the distinction between the two sides and see what are your thoughts, Sudhesh?
Absolutely, I think it's a good point that you brought up, Hugo. As much as we spoke about cash paying on the send side, brick and mortar on the send side, on the receive side of the business, the things are pretty different. Look at India, $69 billion. Of that, about 80% goes into accounts, right? It's non-cash. Look at China, of the $64 billion, 97% is supposed to be money going into account. So if you take these examples, there is a predominant portion of remittances going through the non-cash channel. So quite a contrast, right, between send and receive.
Your point of view. What about, let me ask you then the question, is there any way we can include the agents in the digital revolution? Is there any way we can because we will, I mean, if we don't, we're going to disintermediate a lot of businesses. A lot of businesses that in many countries are ethnic people working for their own people, serving their people. We, in a way, are disintermediating them. Is there any way we can get the agent in this digital revolution?
They definitely have a role to play, because initially when you are starting, as I told earlier, this community, more so that you're dealing, how can you reach them? There has to be this agent coming into picture. It's just about how you're incentivizing him now and looking at the journey cycle, how matured it is, and then you withdraw and then you start incentivizing him in a different way, where he just starts getting the money in terms of volume, and then you kind of give this cost benefit back to the customer. If you ask me, the answer to your question is yes, there is a role for this agent to play initially, because these people meet people, they talk to people, and they are the catalysts to actually get this. But then always these agents have a fear in their mind that, today or tomorrow, I am actually preparing this customer to be going away from me because I am making him prepared to send self-service. But then we'll have to give them a kind of an assurance that the way of incentivizing would be changed, and then this is how your volumes will start coming in. They will continue to be there.
So I think I kind of partially answered the question already with this view that if you provide a solution which is a little bit more comprehensive, the full disintermediation of the agency model will happen. Having said that though, I think there is a role in a future for someone.